Edward Stevenson with TimelessWealth.net, and the following is technical analysis on Nutra Pharma Corporation, traded under the symbol NPHC. I recognize that there is a fundamental aspect to the security, whatever is driving the market and bringing in volume. However, for the purposes of this video, we will solely focus on the technical aspect to Nutra Pharma's market in an effort to discover potential future trends. Now before you, what I've outlined here is the 7-month, or rather the 6-month daily chart for NPHC. As you can see, there was a nice run up back in mid to late 2009, ran from what looks like 4 cents per share to nearly $1 per share, peaked at 99 cents, and has since then retraced as low as 27 4/10 cents. And finally breaking out once more. What do I mean by breaking out? Well, the first thing you have to ask yourself is, are we in an uptrend or a downtrend? That's easily defined by taking this low right here at 28 cents per share, connecting it with this low right here back in early February, and this low right here just a few sessions back. This line is sloping upwards, meaning we are in an uptrend. If it helps you better understand the concept, by all means take this high right here and connect it with this high coming off this session right here and this one here, and you have an uptrend, supporting trend line and a resisting one. In any case, what I'd like to outline here is the manner in which you would have approached this one had you been watching it just a few sessions back. We had resistance at 50 cents per share, just this, the low coming off Friday's trading session, and this would have posed resistance, this horizontal line indicated in red. That dates back to being resistance right around this period right here before the price broke out and rallied to 99 cents per share. Supported the price a few sessions here in the retracement before the market broke down, as well as posed as resistance dating back to this area. So the good news is that the market is testing highs dating back to late 2009, this period right here, November, December. So it's very nice to see how the market is churning around. Moreover, this breakout, as you can see, the price had broke above the 50-cent mark coming off Friday's trading session, came on above average volume. So that's bullish. There is no divergence between the volume and price. This is a strong positive correlation. In fact, if you'd like to look at it with even more detail, what you can do here is drag out another resisting trend line right here. Let me just indicate that in red, and that would be the resistance coming off of this channel right here, agreeing with the 50-day simple moving average at that point in time. That's this red line right here. I realize it's a little difficult to see, but at that point in time it did correlate. And as you can see, the breakout came on this trading session right here, where we saw above average volume. So the good news is that when the market declines, we're not seeing much volume. Neither are we seeing much volume when the market's consolidating or trading sideways, such as this period right here, this one here. But we are seeing above average volume frequent the market when the price breaks out or above resisting levels. So in any case, for support, we are looking at the 100-day simple moving average, which is this trending white line right here. Again, it might be difficult to see, but reference in the top left hand corner, that's at 47 cents per share, as well as the 20-day simple moving average, agreeing with this uptrend line at 42 cents per share. So that's this really lightly dotted trending line, which is also the middle Bollinger Band, as well as 39 cents per share, which is the current trending 50-day simple moving average, parabolic SAR, which suggests a bullish market when it trends underneath the candles, and the longer term supporting trend line that we don't want to see the price break below. We've seen it tested back here and not once since then. As you can see, it's been supporting the price all throughout for a good 6-month period, so this is a strong one we'd like to see hold. So in any case, once again, 50 cents, 47, 42, 39, 36, which is parabolic SAR, the lower Bollinger Band at 30, and even 28 cents per share at the 200-day simple moving average offers support. On the flip side, we have resistance. Let's take a look at this high right here. If the market happens to bump its head in and around the 61 cent per share mark and heads back down, we can consider this a double bottom. In any event, this is quite a key resisting level at 59 cents per share. So that would be the close on Friday's trading session, dating back to being resistance around this area right here. You can see that was a high on this session. This one supported the price here. And moreover, when we saw this breakout back in late September, the price pulled back and tested this one supporting level. So this is a key one for the price to break above 59 cents per share. So I'm just going to circle that the right hand side right here so you can keep that in mind. Remember that if the price pulls back or starts consolidating or trading sideways, we always have this uptrend supporting trend line indicating green. Remember that just because this is now support, so we'll indicate this in green at 50 cents per share, does not mean that we don't have another ascending triangle chart pattern forming using this uptrend trend line and this resisting one indicated in red. So I would imagine that as price approaches the apex of the triangle right here, we will see some price action one way or the other. The market will also test resistance at 70 cents per share in the event the market does rally. So that will be this mark right here based on the highs here, as well as this little channel right here. But the key mark, and let me just make this one dash line, I don't believe this will be a key resisting level, but the key one in my opinion will be 75 cents per share, which is this mark right around here. And I think that this is essentially the last true resisting level beyond, or rather just before 99 cents per share, which is a 52-week high and poses quite significant resistance. In any event, let's see how the market shapes up. If an update is needed, I will be more than happy to provide one. Resistance at 59, 70, as well as 75 cents per share is what the market should look forward to in the event that the market pulls back or consolidates. Not the biggest deal in the world. It would be nice to see this uptrend trend line hold. If not, we're looking at the 100-day simple moving average as well as 50 cents per share. We're looking at the 10-day simple moving average at 48 cents per share. The 50 at 39, parabolic SAR at 36, and most importantly the 200-day simple moving average, especially if you are a NPHC long, 28 cents per share. The technical indicators here more or less paint the same picture. I like to see the fact that the market is showing strength and all these indicators are curling up. Money flow index is often one of my favorites, and I just like to look at the way the market is shaping up in terms of volume and price, and the indicators are not showing any sort of negative divergence, which is good to see. They're agreeing with what the price and volume is telling me. Once again, this was Edward Stevenson with TimelessWealth.net. I encourage you to visit my site and tune into some of the educational materials, articles, publications, and all sorts of tools and resources available to traders and investors at TimelessWealth.net. And most importantly, sign up for our free newsletter for overlooked trading and undervalued investment ideas. Thank you for listening.